Hi everyone, welcome back to the another video presentation. In this video presentation, I would like to discuss about the DishTV script trend analysis. Along in this video presentation, I would like to explain about the important support and the resistance level along with the new pattern analysis, that is wedge patterns. Before entering into this or the video presentation, I would suggest everyone to go through the disclaimer once. This content is designed simply for informational and educational purpose, not recommendations or tips offering to any of the person, group or individual. Before taking any position, please consult your financial advisor or do your own individual research. We don't accept any kind of the profit and loss occurring by usage of this video content. This video content is done by the interest and the curiosity of the video maker. Now let us enter into the main discussion part. If you observe over here, one blue line is showing as a double top at this of the price level around the 110 of the price level. And if you observe over here, the Dish TV India Limited India daily chart pattern of exchange and SE, opening price is the 76 and the closing price is 77, almost 1 rupee 10 paisa has increased with the high 79.60 and low is 75.30. If you observe over here, I have drawn one trend line. This trend line is a downward sloping trend line connecting the two equity 2 to 3 of the lower levels. This is the first top around the 110 of the price level and the second top around 100 of the price level and the second and the third top would be around the 80 of the price levels. So over here at the particular the 72.5 to 75 of the price zone, the script has given a very good of the breakout and currently the price is trading around the 77.0. What exactly the wedge chart pattern signals? A reverse of the trend that is currently formed within the wedge itself. Wedge are similar in construction to a symmetrical triangle in that there are two trend lines, support and the resistance, which bands the price of the security. The wedge pattern differ in its the general a long-term pattern usually lasting the 3 to 6 months. It also has converging trend lines that slant in the either upward or downward direction, which differs from the more uniform trend lines of the triangle. There are two main types of the wedge pattern. One is the falling wedge pattern, another one is the rising wedge pattern, which differs overall of the slant of the pattern. Falling wedge slopes downward. So this pattern is calling as in a falling wedge pattern, and the blue line indicates the support line and the red line indicates the resistance line, and it has given a breakout over that level. Now let us discuss about the wedge pattern. Falling wedge chart pattern. It is the chart pattern formed by price action which is contained within converging and the descending trend lines. This is created when there is a profit booking in an uptrend. These are the pressure areas in the script chart where some bulls are pessimistic and wants to sell the stock and to book the profit, whereas some bulls are optimistic about the market and keep buying and slowly on every of the fall. In the beginning of the pattern, there is more bearish activity. As the price falls further, there is no bullish activity. As the price falls further, there is no more bullish activity. This results in lower low, swing low, and lower low swings high in the dimension of the range between both the support and the resistance line or sloping downwards and converging. It is the bullish continuation chart pattern. The pattern in the form of the wedge pointing down with the price appearing to fall down, hence the name as a falling wedge chart pattern. How falling wedge chart patterns are formed? This pattern is formed during the price action between the heavy buying and selling areas. These are the pressure areas where bulls are weaker than the bears in the beginning but becomes the stronger than the bears at the end of the pattern. So here the bulls are strong and the bears are weak. At this of the price action level, the bulls are weak and the bears are very active. As the target price is approached, there is increased selling due to the profit booking. This brings down the price. As the price falls substantially, it becomes an opportunity for the buyers to buy back the stock. This creates the swing bottom and price goes up. As the price climbs up, those who wants to put the profit early but fail to do think that now is the opportunity to sell there of the scripts. This creates the swing top and the price falls below. This will continue to create the lower and lower swing high and lower swing low, which appears to be bearish. This is an apparent but minor trend reversal, but the strong bullish under the current is expressed in the fact that each subsequent range diminishes in size, indicating the decrease the moment of the fall. If you over here, there is a huge gap, and if you were converging the smaller the size, this contracting range with reducing the volumes gives us the clues that the apparent downtrend is slowly streaming. So it is not the classical downtrend but corrective reaction in an uptrend. So prepared of the upward breakout in the direction of the previous trend. The two trend lines is extended joining on the right side. This completes the falling wedge. The slope of the lower support trend line is less steeper than the slope of the upper resistance trend line. This also indicates that the bearish force is lesser stronger than the underlying the bullish force. After all the selling is exhausted, the bullish activity become apparent, where the last range became the smaller than all of the range. The price breakout of the falling wedge towards the upward of the direction, thus the uptrend resumes and continue. What is the significance of the falling wedge pattern? The pattern trading is one of the strategy of making money in trading. Among the chart patterns, falling wedge formation gives opportunity to enter and re-enter a bullish runs. Falling wedge chart pattern formation is a bullish continuation pattern, so it appears in an uptrend. In a bullish market, when the price reaches the relatively minor resistance area and the minor target area, there is the area going to be the sell off, which will later be completely absorbed by the buying force. When there is sell off, the price falls, forming lower low swing high and the lower low swing low. Though this pattern appears to be the bearish, the contracting range gives a clue the momentum of the fall is reducing. The steep upward trend line, which forms the upper border of falling the wedge formation, and not steep lower trend line which forms the lower formation, clearly tells the support created by the buyers and the stronger than the resistance created by the sellers. So this is about the falling wedge pattern. If you observe over here, I have drawn highlighting the resistance levels with the thick red color of the horizontal line. First of the R1 and second one is the resistance, second resistance of the R2 around the price of 89.35 and the first R1 is at the 84.37. The price could not able to cross about this level, and if it moves, the support lies around 74.57 and the strong support lies around the 69 to 70. There is a strong support of the price level if you observe over the previous or historical of the price movement. So these are the support and the resistance line. The support and the resistance lines which gives you the clear understanding of the demand and supply analysis. If you observe over here, the price action over the last 2 to 3 months, the price has moved in between of the 80 to the 70 of the price levels. So this is about the chart pattern falling wedge chart pattern analysis, support and the resistance line. demand and supply analysis, and the volume analysis. If you observe over here, there is volumes has given a breakout, anticipating the further price to move off the level of 84. If you could not able to move, the next the support lies would be around this. If people who want to enter into this position to make a profit around 85, 84.5 to the 85 of the price level, keeping the stop loss of 75. If anyone wants to take the risk, they may enter at this of the price level. So this is about the DishTV stock chart pattern analysis with the double top and support and the resistance of the various points has been discussed in this video presentation. If you like this video, please subscribe and stay for more updates. Thank you very much.